Welcome back to the channel, and if you made it here before the bots destroyed the comments section, you must have your notifications working. Today we're looking at 3 red weeks, 3 down weeks, and 3 weeks from all-time highs. How things are potentially different at this time with these signals that generally suggest further downside. So without further ado, hit the like, subscribe to the channel if you're new here, and check out the weekly reports coming out tomorrow. Link in the top of the video description. That's for the economic report, Bitcoin, and altcoins. So we've been tracking the 3 red weeks, which suggest further downside. We've also been watching 3 down bars. So in this case, 3 weeks that have lower highs and lower lows. So if we turn on our swing indicator and turn on our down bars, we can see with these red arrows to the downside, these are the signals that we're watching that generally the probabilities say that there is further downside to go from this particular move. Now, I'm not all doom and gloom. I know people are generally looking for some sort of hopium because maybe they bought at tops and they're wanting price to keep going up higher, or they're new to the market and they just expect price to always go up. But the markets don't just go in one direction. We often see consolidations. And these particular signals have suggested consolidation many times before in the market. We've seen it on a daily chart. You've probably seen the channel here. In December, we had 1, 2, 3 days down, lower highs, lower lows. Forget the green, it's lower highs, lower lows. And then that led to a prolonged distribution before a correction. That was one of the major ones from the December all-time high when greed was getting very extreme. You can see it right here on the fear and greed index, getting right up there towards the extreme greed. It was hanging out there for about a month. And then we also saw it in March of 2024. 1, 2, 3. So lower highs, lower lows. Even if it was just a marginal lower low, it was still 3 days in this case, where the market had sold off from an all-time high price, which suggested that sellers were getting stronger and buyers were getting weaker. Doesn't mean it was about to collapse, but you could see a changing of the guard and the trend was beginning to change. And they were some of the first signs there. The market went sideways, tested the 72K level a few times, crashed into May, crashed into June, crashed into July, and then crashed into August as well. And also a 30% correction from that point. So the 3 down bars, whether we're watching it on a daily chart or a weekly chart, are something that I definitely watch and I pay close attention to. In this case, we've seen it now. So it's confirmed, time's up. The 4 days to go, which we looked at last week, we're watching this signal come to fruition. Today is the day. So we've seen it happen now. We've got the 3 red weeks. So now we have the 2 signals. 3 red weeks, 3 down bars. I know that can get a little bit confusing, but if you stick with it, it's pretty straightforward when you can pump this into your systems. It's objective. There's no second guessing it. It's right there. So now we've got those 2 signals. What can we expect to happen next? Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. Well, first I want to have a look at 3 weeks from all-time highs and significant local tops. In many of the cases, they were all-time highs at the time, but then of course later they've broken higher. So 3 weeks from the highs, and pay attention to when we see these signals as well. We're at 3 weeks now, 1, 2, 3. Now these weeks have held up relatively well. They've broken a swing low here at 112,000. We failed to get back above 114,000, which would have turned this week into an outside week. So it would have been a higher high than the prior week. So we didn't get that, but it hasn't completely crushed the market these last 3 weeks from this top. So what do we see last time? 3 weeks from an all-time high price, 1, 2, 3. It went sideways for a bit, and then we had the collapse. Prior to that, we only got 3 weeks here, 1, 2, 3, and it basically jumped up here, but you really had 2 weeks down, 1 week inside, and then an up. So we had this one right here after the inauguration, sideways, collapse, rally, collapse. The May top, 1, 2, 3, then you had a bit of a pullback, but it was not so severe. It was very, very shallow, and then we had that run up into the July top when the extreme greed got into that extreme greed. Well, the sentiment got into extreme greed, and then back here in December, 1, 2, 3 weeks, again, slightly down, rallied up into the presidential inauguration. Of course, one of the biggest events that we've seen in this cycle. And then again, 3 weeks held up and then collapsed. We go back to the next local top, 1, 2, 3 weeks, slightly down, tiny rally, then it started to fall again. And then there were no other all-time highs after that point. Let's look at the prior cycles. And I'm going to start with the April top before I get to the November top, because there's a bit of a difference in those two. April all-time high, 1, 2, 3, started to rally, and then the collapse. These weeks here, you didn't get 3 weeks after the high. So you can see the high there, 1 week down, and then it rallied. 2 weeks down, then it rallied as well. So 1, 2, 3, continued to rally. And then we get to the all-time highs, the end of the cycles. And in the last 3 cycles, within the first 3 weeks, we've seen a collapse. We've seen a collapse of the price within that first 3 weeks. Could this time be different? Of course, that question always has to be put out there. But you can see from 2021, that was a significant down bar. You had a 10.5% correction from the high, but that's not the big severe bar. Then you had the market trying to hold up. You had some buy the dippers out there. There was a lot of thoughts that maybe this thing can keep running a little bit longer into December, like the prior cycle of 2017. And then came that last week of November, first week of December, and you had this big down bar, 13.7% on the open to the close, but the entire week we had to endure a 32% swing. So a lot of the times people will talk about open and closing prices and look at those as the percentage down, but when you're living through it, that's a 32% swing, high to low. You're watching your portfolio potentially go from 100 grand to 70 grand or $1,000 to $700. Doesn't matter what it is, you're still seeing a 30% swing, provided you just in Bitcoin and of course not trading in or out of anything. That's what the swing would look like. So although people are looking at just these little tiny percentages at the end of the month, the fact of the matter is no one really just looks at their portfolio on the first of the month and then on the last day of the month. People are watching it multiple times a day. And so you're living through these 30% swings. So you got a massive swing here. Well, massive swing on the third week, a pretty significant swing off the all-time high, which took the price back underneath the previous tops. And it was quite a severe close there as well. And if we take a little peek at the volume even started to pick up compared to where it was on this rally. Started to see these increase of selling activity for that downside. So we'll take the volume off again just to remove some of the noise. That's 2021. We take a look back at 2017. That first week, 27% down. Of course, things are different now in a fundamental way, that the market caps are a lot higher. Bitcoin's market cap's obviously 5-6 times larger than what it was back in December of 2017. But nonetheless, you still had a very severe swing. And this is on a weekly chart that took out 2 of the previous weeks' price range. And those weeks were very substantial in themselves, 32% up in that open to close, but the entire week was 54% of a swing. And then the final week into that high was 32% with an open to close at 27%. So basically that week there, very extreme, that flushes out a lot of the gains. And I believe there was also a 3-day down signal. If you bear with it, there was a 3-day down signal from that all-time high as well. So there were a number of reasons for that top. You can see the all-time high, 1, 2, 3 days down, lower highs, lower lows. You had the red bars, but the main importance here is the lower highs, lower lows. And then you got to the 5th day down and basically just flushed everything out and started to trend sideways. So on the weekly chart at those highs, you got the big flush and then a couple of weeks rally and then it flushed out again. So that's now 2 cycles where we saw within the first 3 weeks of the all-time high, which is where we currently are for Bitcoin in this cycle, another flush out. Now we have the 2013 top. So we got to just zoom right in here. And the 2013 top, it ran up really hard, really fast. And of course, those last few weeks, 51, 55%, 64%, 18%, but you can see the swing for that last week, 64%. That's what the price was during that week, going from $700 to $1,200 and then back down to $900. Very, very big movements within a week. Now, the first 3 weeks, 1, 2, 3, huge flush out. The first week, the market tried to hold up, tried to buy the dip. It was unsure. It was basically shocked. And then the 3rd week came and it washed it all out yet again. This was a rally into a lower high, so basically a dead cat bounce. And then it fell from that point. So the thing that we're interested in here is in those first 3 weeks, major flush out, and that was just a bit of a dead cat bounce within the overall move to the downside. Now, in those last 2 times, you could argue that, well, the market was running up super hard, super fast. You had the blow off top from $200 up to $1,200. That was, you can see where it broke out. And of course, it needed to be met with some sort of significant flush out. Well, you had it in 2017 as well, running up super hard, super fast, needed to be met with a flush out. But what about 2021? So at these tops, it wasn't really running up super hard, super fast at this point, yet you still had a significant flush out and then another flush out at those highs as well. So we're in the all-time high space now. We've seen 3 weeks. And the prior times we've seen 3 weeks within the all-time high space, we haven't seen any major flush outs. 2025, January, no major flush out, barely broke, we didn't even get to break the swing low. 2024, so that's December, 1, 2, 3, even had a little rally, pullback, broke a swing low, but then closed above it. 2024 in March, didn't break a swing low. It put in a low, 1, 2, 3, didn't break there. And then that's basically the extent of what the market has done within those 3 weeks from the high. Now, in terms of a percentage in those 3 weeks, top to bottom, we've seen 17% in March. We saw top to the lowest point within those 3 weeks, roughly around 15, 16%. The top from the inauguration saw around 16.6%. And we can look at from April. This is going to be a much, much larger move, but there's 27%. So I'd be more inclined to watch these 3. And we had this one right here, 1, 2, 3 weeks. So 10%. 10, 16, 17, 15. What are we at now? We're basically, right within the middle. If you put an average there between the 10 and 16%, looking around the 14%. So we're at 13.8 so far. We have seen those 2 signals that I talked about, the 3 red weeks and the 3 down weeks as well. I think it was on this chart here, yep. So there is a lot to suggest that there is further downside, but it could potentially be a little bit more subdued than something like coming into an all-time high price and that the cycle is over. So what I'm trying to convey here is that it doesn't seem like, according to the probabilities, and what I can see from the chart, it doesn't seem like the cycle is over yet, just based on what we've seen on every one of the previous cycles to this time frame, especially to the downside. We obviously want to keep in mind any of the invalidation levels. A couple of things that people are watching a lot of at the moment are your 20 and your 50 weeks. This is the moving average, of course. It's touched the 20 week, 50 weeks down here at around 97,000. As we've discussed, it's climbing at about $1,000 a week. It has slowed a little because, of course, the ranges of the bars have also gotten a little slower, and it's basically trading around the same price now. So between 107 to 120, And that the 50-week moving average from 96.8, call it 97,000. Next week should be somewhere around in the vicinity of the high 97,000s. The week after that, somewhere in the mid 98s to 99s. And that's provided the price stays where it is. And that comes in roughly around the 99,400 level, which is the 50% level of this entire range. So looking at a crash versus consolidation, I think we're still leaning on the side of further consolidation here. I'd start to reassess things if we saw a breakdown of the 50%, which is also around the previous swing low there of June. And that's if we got closing prices underneath those levels here. So that's underneath $98,000. And then your 50-week, if that's what you choose to watch on your charts as well, I know a lot of the market is watching that at this point, then you would potentially see closes underneath that level as well by the time we got to that stage. Now, wicks underneath those level spikes, that's going to be fine. It could potentially even line up to be a nice looking double bottom with that previous low. So that would be pretty good. That would be a nice solid bullish sign if we saw that happen over the next couple of weeks with the interest rate announcements coming up, where the market is now anticipating a double rate cut down to 4% from where we currently are at 4.5% for the US. Now there's an 8% chance of that happening and a 92% chance of a single cut here, a 0.25%. 100% chance they're saying that there's going to be an interest rate cut. So if we were to see that over into that date of roughly the 17th, we've got about 9 days to go. And, we see this market rally a little, get rejected again, or if it just goes straight down from here, fall into that date of your 17th and bounce from there, that is going to be a nice strong signal for this last stage of the bull market. So we could potentially see it run pretty damn hard out of that date. Of course, there's a lot of ifs that happen here, but I'm looking at a roadmap that could lead into that point. Now, another few reasons why this could be still part of the resetting and the market consolidation is the sentiment reading. You've got the crypto fear and greed index. Something that we're watching from last week is that when we see these signals play out, there's 3 bars down or the 3 red weeks from these highs, generally the market, Bitcoin, has been in extreme greed for a lot longer than a single day here and there. And so the last time we had extreme greed for Bitcoin was 12th of July, basically Saturday, but that's running off these last 2 days because the reading comes out the following day. You see all of the market activity and then the reading comes out the following day. So it's essentially for the previous day. So that's for these 2 big days that came up here, 10th of July, 11th of July, new all-time high prices, $117,000, really, really exciting stuff. Extreme greed, 1 day. That's it. And then it basically cooled off just to greed. The other day we saw was the all-time high again in May 22nd, ran into a new all-time high at around 110, 111,000, and then cooled off straight away. And at this stage, I think there is a good chance that we hit somewhere around 98 to 100,000, maybe a little higher there. Like you can see the swing low that comes in at 105, 100. That's an important level there as well. But in terms of the rallies to the upside, if we're to get any sort of invalidations, we want to see Bitcoin closing above 114,000 and 116,000. This chart shows it a little better. You got 116,000 there, and then that's the 7-year resistance line. So any sort of price action now, between now and the interest rate announcements that can get Bitcoin to close above 116 to 117, that's going to be much, much more bullish. And then I think there is a much less chance that we retest these lows at 107, and retest anywhere near that $99,000 level. So clarity, movement above 116, consolidation above 116, 117, then puts the chance of a move to the downside at a much lower chance. If it rallies and gets rejected, anywhere up to about 116, 117, rejected, closes underneath that level, again, continues to put the chances on the side of the bears holding control, going to hit 107, and then probably come back through, test 105, and potentially somewhere between that $98,000 to $100,000 level. Now, the forward returns are also, at least on the probability side, looking at further green months coming for October, November, maybe December as well. If this weren't to happen, This is October here. You can see all the greens that have come up. You're at a 73% chance. August was almost always going to be red. September is a 50-50. It's currently at around a 50-50 because it's got a green here as well. If we turn this off, you can see it's down to 46. So it's basically a coin flip here for September. But looking at October, 73% chance. The last time it was red was in the 2018 bear market. The time before that was in the 2014 bear market. And then the time before that was in 2012, which was a raging bull market, or getting to the point of a raging bull market. So why could that be? Oh, I don't even have these damn charts. Why could that be different here? Well, you had basically an entire green year, barring February, which was red, flat in March, April, then started to run again and again and again and again and again, pull back, and then it kept running. November, December, here comes 2013, green, 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 couple of months off, and then it just kept running again. So it happened to be that the dice was thrown. October was red in that year, but basically everything else was green, and it continued to be green into 2013, couple of reds, and then just kept booming. So taking out the bear market years, 2018, 2014, because this year hasn't looked like it at this stage. I mean, yeah, it really hasn't looked like it's been a bear market at all. We can say that it's gone to new all-time highs. One would expect that October has a very good chance here of being green. We take those out. You can see that it's now up to an 84% chance of being green. November turns out to be a 69% chance, and then December 61%. So you would look at these being all green, but then you've got this sort of green, much higher chance, and then it starts to fall off as you get towards December. So if we did have this nice strong run after the interest rate cut, if that's coming up in the next couple of weeks and it runs up into October, starts to fade out, that's also an interesting point there. As we can see with the cycle analysis here for Bitcoin, September is going to be the grind month. October, a bit of a grind early on and starts to really run hard. And then you've got November running up as well, and December also carrying through to the end of the year. That's looking back at the 5 and the 10-year cycles. December looking stronger than November when we go back and put the 5 and the 10 years together, as we can see here. And of course, leading into the peak of the US real estate and economic cycle, somewhere around this sort of 2026 area. Of course, we're in the second half of 2025 now. We're running into this peak. We're getting much, much closer at this stage. Still seems like the market is factoring in a lot of these decisions here with the interest rate cuts because of some of the economic news that we heard come out last week, with unemployment rising slightly here, going from 4.2% to 4.3%. Historically, it's still at low levels, but you can really start to see this trend of the unemployment rising. And like we saw last week as well, there was not many jobs created. Non-farm employment change, they were expecting 75,000 jobs, down from 79,000 the prior reading, with only 22,000. So Trump and all these promises about jobs really hasn't come through at this stage, just according to the data. And we have some big readings coming up this week: PPI, core PPI, and CPI, month over month, year over year. Unemployment claims to also come out. And then that leads us into next week, where we get the federal funds rate announcements and more of the FOMC press conferences and so on. The market has hit a new all-time high closing price on a weekly basis. This is the S&P 500. So we're still seeing that the investors and traders are pricing in that we're probably going to see a cut. It looks like Jerome Powell is now in a difficult position. We're seeing inflation rise, and we're not seeing unemployment come down. Very, very difficult position. Seems like the market definitely wants higher prices. They're factoring it in. They're buying up more. And we're seeing it with the S&P 500. We're seeing it on the NASDAQ as well, climbing slightly higher here. Overall, though, when you look at the S&P 500, we've been in a bit of a grind now for the last couple of months, but even more so on the NASDAQ, as I guess we come to some of these decision days in the next couple of weeks. With this interest rate cut possibility, and it seems like it's getting more and more to be a probability, The home builders ETF has continued to run harder and harder here, breaking the 50% in early August, so a month ago, now coming up to our next resistance level at around 121. So this is home builders ETF, basket of all of the home builders there in the US. And this is one of our leading indicators for the end of the cycle, coming into a peak of the real estate cycle. So here it is here, coming to the peak. This is some of the things that we're anticipating years ago, where we would see some sort of topping pattern begin to form here. Now, if this does run up and break to a new all-time high, fantastic. It just means that we've got that extra bit of time to go for the end of the cycle. The stock markets, as another reminder, generally peak after the peak of the real estate and economic cycle. But we're, of course, seeing some of the problems begin to arise here with the inflation and the unemployment rates and all sorts going on in the US. Friday saw a huge tanking on the yields. So you see the 30-year yields have fallen from 5% down to 4.77. 10 years have also broken some support here at 4.18. They're down to 4%, 4.1%. And the 2 years have also broken down here, hit a low of about 3.5%. So they're coming up to some support lines here for the 2 years, but the most important for the long term is the 30 years. Now, they haven't broken down from this structure yet. It's been a very significant day, of course, with the unemployment announcement coming through and the interest rate decisions coming up soon. This is still just a little bit over where they're looking at it long term. This is still not overly sensitive to what the current market conditions are. It's going to be the 2 year that is most sensitive to what's going on in the markets right now. The US dollar is at 97.8. We saw a day down there on Friday. So if we do see the cuts come through, potentially we start to get that breakdown again, which is also another good sign for risk on assets. So really nothing to, at this stage, be overly concerned with the market in general. It seems like they're doing everything they can to keep supporting the market into this peak. So bullish, going up, wall of worry. There's worry points along the way, but the markets keep rising higher and higher. I think Bitcoin is going to benefit from this, at least in that shorter term, that 3 to 6 month period. Of course, let's keep following the charts, watch those invalidation levels to the upside and to the downside. And this week, I'll go through more on altcoins as well. The USDT dominance, others chart, total chart, and Ethereum and Solana as well. So stay tuned, hit the like, subscribe to the channel if you're new here. Don't forget the reports are coming out this week as well. That will be the link in the top of the video description. And if you want to plan your long-term trading and investing strategies leading into the peak and into the crash, check out TIA Premium. Link is down below as well. I'll see you guys back here at the next video. Till then, take care and peace out.